Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, and we've got a big week ahead in the markets. From Nvidia's earnings to inflation data that could sway interest rate decisions, there's plenty to keep an eye on. Let's dive in. First up, all eyes are on Nvidia this week as the chip-making giant releases its earnings on Wednesday. Investor enthusiasm for artificial intelligence has been a driving force in the market this year, with Nvidia's stock up around 150% year-to-date. But with great gains come great expectations. The earnings report, along with guidance on AI investments, could be a key inflection point for market sentiment as we head into what's typically a volatile time of year. Will Nvidia's results justify the hype, or will we see a pullback reminiscent of the dot-com era? We'll find out soon. Now, turning to the U.S. economic data, Friday's personal consumption expenditures, PCE price index, will be in the spotlight. This is the Fed's preferred inflation gauge, and it's expected to show that inflation is continuing to edge closer to the 2% target. Fed Chair Jerome Powell, speaking at Jackson Hole last week, acknowledged progress on inflation and hinted that the time for policy adjustment might be near. This all but guarantees a rate cut at next month's policy meeting. The PCE data, along with durable goods orders on Monday and revised GDP figures on Thursday, will provide crucial context for the Fed's next move. Over in Europe, Friday's Eurozone inflation data for August could shape the European Central Bank's decision on interest rates for September. After an unexpected uptick in inflation last month, all eyes will be on whether core inflation and the services sector remain stubborn. Markets are heavily tilted toward a 25 basis point rate cut, but any surprises could prompt caution. National releases starting on Thursday will give us a taste of what to expect. Australia is also in the mix this week, with Wednesday's inflation numbers potentially showing headline inflation pulling back into the Reserve Bank of Australia's target band for the first time in 3 years. This could put additional pressure on the RBA, which has been hesitant to cut rates while other central banks are moving toward easing cycles. Investors will be looking for signs of relief in consumer sentiment, which has been weighed down by high borrowing costs. And don't forget, we'll also get a look at Tokyo's August inflation report on Friday, which could provide further clues on Japan's monetary policy. Let's talk about gold. The precious metal has been on a tear, reaching consecutive record highs since 2022 and surging over 20% this year alone. With $3,000 an ounce now within sight, gold is benefiting from global uncertainties, from geopolitical tensions in the Middle East to the upcoming U.S. presidential election. Add to that the expectations of U.S. interest rate cuts, and it's no wonder gold is shining bright. But remember, nothing goes up in a straight line. Investors should be cautious as markets often correct themselves, especially when the excitement starts to wane. That's it for today's Capital Markets Quickie. It's a pivotal week, so stay tuned and keep a close watch on these developments. I'm Endrit Cela, and I'll catch you tomorrow morning here on CMQ. Have a great week in the markets.